Welcome to this edition of the Capital Brief. I'm Seth Berenzweig here in our lovely studio in downtown Tysons, Virginia, our BL Media studio, and we are pleased to be back with our colleague and friend John Tamny. John, how are you today?
I'm great. Good to be back. Hate that it's summer, but...
I know. I think we're going to be done with cicadas in about 2 or 3 weeks. Is that what you're hearing?
I've heard those rumors. Right when the humidity really kicks in.
Yeah, exactly. Well, we're already in a good mood because the economy is opening, the lights are coming back on, so a few ugly cicadas are not going to ruin our excellent mood, right, John?
No.
Okay. We're here talking today about a topic that I think is really rippling through our economy and our country on a daily basis, and it's really the price of energy, and more specifically the price of oil. And I'd like to talk to you about that today because every day I hear on the news, where are we with the price of oil? Is it up? Is it down? What's happening? Why is it happening? And it becomes a very muddled conversation. And John, you're always good at really kind of, realigning the chairs on the ship deck on these things. So I'd like to talk to you about that. Just by way of background, in looking back for some history on oil and energy prices today, I did a little bit of a prep and a historic look back. And the thing that really surprised me is how many price shock waves we've seen just within the past year or so in the price of oil and related energy price issues. There was a day in April of last year where the price of a barrel of oil went down to roughly zero. It was to a point where people were looking to pay someone to take it off of their hands to store it. It was, and I think there are people that are still trying to figure out and scratching their heads what happened. Talking about a price fluctuation in the other direction, we had a day within roughly the last year or so where there was an attack on a Saudi oil facility. It was, even though it was just one attack on one facility, it had a price shock wave throughout the world because it was an important facility. We see all of these ups and downs, and we had a related conversation on a loosely related topic about a week ago on inflation, but really going into the price of oil and energy today, before we get into a deeper level, why do you believe that the price of oil fluctuates so rapidly and without really any consensus or clarity on what causes that?
It fascinates me why there isn't more clarity and agreement on this issue. If you look back, all you need to do is look at a graph of the oil price since 1944. And what you'll see is when the dollar had a stable definition, love or hate the gold standard, this is not me trying to make a point about how money should be measured, but when the dollar had 1/35 of an ounce of gold definition from 1944 to 71, if you look at a graph, it's kind of like this, it's flat. And then we severed the dollar's link to gold in 1971, and ever since then it's been like this. It's a very clear correlation. Big oil price movements are related to the dollar in which it's priced. And I think one of the biggest tragedies of economic history is, to this day, people say there were oil shocks in the 1970s related to OPEC. There's no such thing. The Arab oil countries embargoed us. We still consume their oil. The difference was the dollar in which oil was priced was falling. That is what drove the price up. The oil shocks were utterly immaterial to the price we paid at the pump.
I remember the 70s because I was around in the 70s. I'm going to start dating myself. I don't look as sharp and as young as our producer Todd Castleberry, so I just can't hide it as well as he does because he's always looking tight. But I remember in the 70s that I remember being in the car with my parents in a long line in North Jersey waiting for expensive gas and thinking, what's going on? And the assumption at that time, as you've noted, is that there was a fracture in the supply, and therefore everybody was panicking. But your thesis is, and we'll be rolling into this shortly as it goes more broadly today, that was really more tied to the value of the dollar rather than as a function of the supply of the oil. Is that right?
And without question. I mean, let's put it this way. The United States could be utterly bereft of oil, and at war with every oil-producing nation in the world, and also embargoed or not being sold to by every oil producer in the world, and we would still consume the world's oil as though it had bubbled up in West Texas. And how we would is we'd buy from those they sold to. There's just no such thing as an embargo that has teeth. Saudi oil sheikh Yamani, he died recently, he acknowledged that the OPEC embargo, the Arab oil embargo, was utterly symbolic. None of that oil stopped reaching the United States. We simply bought it from those the Arab countries sold to. And so it wasn't a supply phenomenon. What it was a dollar phenomenon. Politicians in their infinite wisdom, seeing the price of gasoline and oil and its byproducts shoot up, imposed price controls, which explains the gas lines that we both remember, I'm embarrassed to say, about the 1970s.
Well, and when you talk about sources of energy, let's stick with oil for a moment. There are other sources of energy. There are other sources of oil in North America. There are the Canadian oil sands fields that have pretty advanced technology for extracting oil, and as we'll get into in a moment, there's other forms of alternative energy. You wrote an article on this very topic recently, discussing the extent to which there is a myth out there, or has been, as to whether fracking was going to have an impact on the price of oil, and whether that expectation was which was accepted by many, was something that was accurate, or was a complete myth. Tell us a little bit about your work on that topic.
Well, my work on the topic reveals the exact opposite. That fracking's been around for 70 years. Let's get that out of the way. It's a very innovative technique. No one's denying that. But there's a reason we never heard of fracking in the 80s and 90s, and we didn't because the price of a barrel was $10 for a lot of that time. Fracking in the United States is only economic if the price of a barrel is realistically $40, $50, $60 a barrel. Below that price, it's costly to bring the oil out of the ground.
It's just not economically worth it.
It makes no sense. And so we're looking, the price of a barrel was $10 in 1998. It was most recently as 1998. The U.S. energy extraction industry in the U.S. was non-existent. We were not a producer of oil, yet oil was this cheap. Nowadays, we're apparently the Saudi Arabia of the North Americas, and the price of a barrel is 7 times what prevailed in 1998. If that's not an indictment of all the hype about fracking, I don't know what is. And what it tells us is fracking is a consequence. For it to work, we must debase the dollar for it to make economic sense. You take that out, we wouldn't be talking about fracking, but oil prices would be much lower.
So one of the important things about, I believe, our program is that we try to focus on talking about issues that happen to people and that matter to people every day. Anyone who's watching this or anyone in this studio, they're going to drive home tonight, they're going to pull up their car, they're going to need some gas. And they're going to notice that the price of gas is up because the price of oil is up. As you've said, the price of a barrel is about $70, which is a lot higher than 10 for obvious reasons. So when people are scratching their heads at the pump tonight saying, what's going on? And they would look at you and say, can you explain to me why it's costing me twice as much to fill up my car with gas? If fracking was supposed to take care of this, if fracking was going to be this great magical relief that never happened, in a nutshell, how would you explain is what got us to this path today as far as the price of oil and gasoline is concerned?
Well, I would explain it in this way. I would say, imagine I'm talking to anyone at the pump, if they suddenly cut the inch in half. Suddenly, if you're 6 feet tall, you'd be 12 feet tall, but your height wouldn't have changed one iota. Just the measure would have changed. All money is a measure. The dollar is the world's measure. It's the world's measure of value. Oil is priced in dollars. The dollar has been shrunken expansively in the 21st century, much as it was shrunken in the 1970s. So as a consequence, oil costs more in dollars. Its real price hasn't changed much at all, but in dollars it costs a lot more. So you think about that, what that means for maybe more impoverished Americans, maybe Americans who have jobs that require a lot of driving. It's really a tragedy what's happening now. They're going up to the pump and they're paying in the D.C. area nearly $4 a gallon to fill up their car. I find that horrifying and mean-spirited, and it's all rooted in this notion that we get an economic benefit from debasing the world's currency, the U.S. dollar.
So you and I share a skepticism of the Fed's, the bureaucrats' ability to walk in and wave a magic wand. It's the old thing where President Reagan used to say, the one thing that would worry you the most is someone walking up to you and saying, "Hi, I'm from the government and I'm here to help." What, if anything, can the government do or not do to reverse the devaluation of the dollar? What can happen, if anything, from our leaders or lack of leaders in Washington to deal with this? Because it's one thing to recognize the problem, but it's another entirely to fix it. Is there anything that can be done here from a regulatory standpoint, or is the general commercial market somehow able to grant some relief?
It's a great question, and I think we've seen from the 80s and 90s how easy this is to reverse. Ronald Reagan ran on returning to the gold standard. Okay, again, this is not me making the gold standard argument, but this was the message he sent to the marketplace. And so as his electoral chances rose, the dollar rose throughout 1980. The dollar soared the day after his election.
Linking it to gold as a measure of stabilization so that you don't have this
fluctuation.
Exactly.
Bill Clinton was arguably the greatest dollar president of modern times, particularly when he brought Robert Rubin into the U.S. Treasury. Okay. Not once when Rubin was at Treasury did anyone with responsibility in that department ever complain about the value of the yen vis-a-vis the dollar. This was a very strong signal, in addition to Rubin's frequent statements that a strong dollar is in the best interest of the American people, that the Clinton administration meant business about a strong and stable dollar.
For the very reasons that we're talking about here.
All those reasons. It's good for the Americans who comprise the economy, the value of their work's not being taken from them. It's also great for investment. Let's remember that when investors put wealth to work, they are buying future returns in dollars. So if the policy favors devaluation, you are putting a bullseye, a tax on the very investment that drives all economic growth. Rubin's a former investment banker. He knew all this very well. And so you got that strong, stable dollar. It resulted in very low oil prices, but you cannot separate the internet boom from this. With the reversal, the reduction of risk related to investment, the devaluation risk, is it any surprise that so much intrepid investment flowed into Silicon Valley and not into inflation hedges like housing, gold, commodities, other hard assets that do best when the dollar is being devalued?
Because they're trying to outpace inflation/dollar devaluation.
Yes.
They're trying to outpace.
During devaluations, precious capital goes into wealth that already exists. Think rare arts, stamps, housing, land, gold.
Right.
During currency stability periods, investment goes into wealth that doesn't yet exist. Currency, income streams related to companies, equity returns related to companies. It's no mistake that the Clinton years were associated with so much feverish investment in a future that is still brilliant, that still lifts us to this day, the internet. When you have a good currency, investors can take risks that they cannot take during periods of devaluation.
You know, it really intrigues me how frequently I hear people on the air talking about, you know, do we want a strong dollar? Do we need a strong dollar? But they rarely talk about exactly what the implications are. And what you're pointing out is, if you can't effectively and efficiently put gas in your car with a weak dollar, you're not going to be in a good position if you're going onto your Fidelity or your Schwab account and trying to buy good companies with weak dollars. We want a strong dollar. But in terms of how to be able to stabilize it, although you're not advocating for it, you're saying there is some historical context for a clue in that maybe pegging it to something else would be one way to be able to make that happen. Is that what part of your thesis is?
No doubt. People can have different views on what it should be, but historically, money was pegged to something else, and with good reason, because you wanted to be able to trust the value of the money today, tomorrow, and 10 years from now.
Right.
And so they happened upon gold not because they were mystics, but because gold was known known globally as this commodity least affected by other market factors, and so it's a great way to define money. Again, people can dispute it. To me, I think the future is probably an Amazon dollar and a J.P. Morgan dollar. That's my speculation. But whatever it is, it's going to be about stability, and we know this as we discussed last week. There's $5 trillion in daily currency trading. That is your massive screaming market signal saying we don't trust money that bounces around in value.
I love the topic that you just indirectly brought up, and that's going to have to be for another show. I love the topic that you just brought up, talking about alternative finance, alternative dollars, crypto finance. And again, a lot of the mainstream conversation on it is, what is Bitcoin doing today? Do you know how many, just for every 20 ICOs in cryptocurrency issuances that are probably bogus or just memes like Doge, there are a handful of very relevant, very creative metrics in the cryptocurrency and blockchain universe that are really slowly and quietly fundamentally changing how we're going to be having a conversation about what is money. Who would have thought 5 years ago that we would be asking ourselves the question, what is money? And we can actually have a conversation that can differ about what the answer is. We have different kinds of alternative, decentralized finance-based cryptocurrencies. We have China that is going into the yuan digitization. The United States is talking about that, but in my opinion, they're being way too slow and asleep at the wheel. And that is a fascinating topic that I would love to get into further with you on another date. Although I think we should acknowledge it as being relevant here today. One of the more immediate topics that I wanted to bring up with you is the issue of alternative energy. The need and the market for alternative energy is obviously huge. If you're talking about how dollars play into the price of oil, where within 1 year the price can literally go down to zero because of this bizarre April occurrence that happened last year, versus and not a huge expansion of time from there, where just because of one drone attack on one Saudi oil facility, the price skyrockets. Obviously, you are correct in saying that there's something broken here. And it's extracting pain on American consumers every day, not just in terms of putting gas in their car, but paying their electricity bill, paying their energy bills. When we talk about oil, we're talking about the broader context of energy. Our friends in Washington are not, in my view, taking enough action. Forget about how asleep they are and how clueless they are on digitization of currency. That's a whole other conversation. But alternative energy has been a topic that has barely been in vogue in Washington, D.C. There are forms of alternative energy. Obviously, you have natural gas, you have hydrogen, and it's no mistake that great companies like Tesla have been growing like crazy, where they don't take a drop of gasoline. Do you think that an increase in reliance on alternative energy, just in terms of the dynamics of supply and demand, would have a calming effect on the price of gasoline in America?
I think no doubt it would. I still think the big driver is the direction of the dollar. And so to me, these other supply-demand factors aren't as big of a deal. The big driver of the gasoline's price is the value of the dollar. But you obviously hit on something very interesting. Tesla cars are basically they're powered by electricity. And it's interesting to think about wind and water were, I suppose, the original alternative energies.
Right.
Then all this time, this oil that was of the earth sat there unused, and then it was discovered as a way of powering the future. It's unrealistic to presume that we've reached the frontier of power. That oil is the last frontier. Logic dictates that something around us that we don't know about is going to be the next way to do this. Is it electricity? My guess is it's probably not, only because it would have happened by now is just a speculation. But I think there's something out there that's going to change this altogether, and it's going to ultimately make oil maybe yesterday's maybe yesterday's commodity.
Well, you've kind of, you being the oracle that you are, you kind of projected what my concluding question was going to be, and we can just get to it right now, although I have another question or two after that before we end. What do you see as the future? I know there's a crack in your crystal ball, but obviously technology always has a disruptive impact on various aspects of the economy, including the price of energy. Where do you see technology over the next 10 years driving what you believe will be among the major candidates for the most attractive supply of energy in the United States?
Oh, if I knew, I'd be a billionaire. Let's never forget that probably when we started doing this show, if we had known what was going to happen to Tesla's stock,
right,
and we'd been able to act on it, we'd be wearing different clothes and driving different cars just among the three of us right here today.
Right.
But rest assured, there is some oddball out there who sees a different future. Let's never forget that the Wright brothers sat in Kitty Hawk flapping their wings, and people thought these guys are nuts.
Right.
Man can't fly. There was a editorial in the Washington Post at the time saying it is a known fact man will never fly. And so someone out there is discovering new ways of powering people, of moving people around that's going to shock us. I'm always jealous when I see babies, when I see young people. I think you're going to live longer than I am. And what you're going to see is going to be awe-inspiring.
Right.
So I know the future's ahead. If I knew what it was, oh well.
Well, I think lithium battery technology is going to play a big role in that. And companies that serve the lithium battery technology recharging and recycling, I think is going to be a really big industry in that. I think not enough interest and not enough investment focus has been put into the recharging and the recycling of the lithium battery industry versus other forms of energy. So I think that that's going to be a very untapped area, and there's a lot of technology that's happening today. These are vehicles that don't have to plug in every day, like traditional electric vehicles. A decrease in the output of electricity as a result, of course, provides for a much greener economic strategy. So I think from a revenue generating standpoint, from an investment thesis standpoint, and from a greener planet standpoint, I think that there's a lot to be said for that. The other thing that I would call for is, and we're living in the age of the upcoming infrastructure bill, maybe. It looks like it's a definite maybe. Depending upon what day it is in Washington, it's a different situation. But I hope that Washington creates some kind of impetus in the infrastructure legislation to create some plan for a national infrastructure for vehicle charging or recharging other than gasoline. It's absolutely amazing to me at this late day and age that almost overwhelmingly of the time that when people need to recharge their car, they have to go home. And that they can't just travel and then find a recharging station just like they find an ExxonMobil or a Shell or something like that. And I think Washington is really going to let people down if they don't this year come up with a way to be able to demonstrate that they can think of a manner of encouraging building out that infrastructure. And I have no idea why they haven't done it. So that really leads me to my last question, which is, I always know that I'm going to get an intriguing answer from you. Is there a place for the government in Washington to play a role here to help Americans with an impact, a meaningful impact on the affordability of energy, including oil? Is there something that Washington can do, such as encouraging alternative energy infrastructure development, encouraging other kinds of R&D to be able to come in and help just us ordinary Americans to bring down the price of energy? Is that something that the government should stay in, or is that something that the government should stay out?
Well, I hope there's no role for government, which probably shouldn't surprise you that I feel
Right.
that way. But think about it. There was no national plan for smartphones. This was something that entrepreneurs envisioned from that initial, brick-sized phone that cost $4,000. They envisioned a supercomputer in our pockets. And so there, as you allude, there's already Exxons, there's Circle K's, there's the different gas stations. If there's a market for electric gasoline stations, and I'm guessing there is, but I wouldn't presume, that's going to be taken care of by the marketplace itself for all the reasons that you say, because it makes sense. And so my concern always when government gets involved is they are constrained by the known. Government always wants to invest in what they already see, what's already out there. We saw this a lot in the late 90s. Oh, wow, internet's really doing well out in Silicon Valley, so governments across the country started to create incentives for internet companies to come here. They're always looking at the past. I want to see what innovators are thinking about the future. There is someone out there, and there may be many people out there who think Elon Musk is nuts, that he's focused on battery power. Are you kidding? He's gotten false market signals from the marketplace based on a lot of subsidy for battery power. They're thinking there's another way that's going to be much better. So I don't want government to create what already exists. I want the entrepreneurial class to create what we've never imagined. What we're sitting here, we'd say, oh, wow, they're going to do that. We'll ridicule it. Entrepreneurs create an entirely different future based on skepticism about their viewpoints.
John, you're doing a great job triggering future topics. Now you brought up Elon Musk. You talk about Elon. You talk about the Boring Company. You talk about the direction of Tesla. You talk about whether CEOs should have some kind of a freedom of speech on cryptocurrency. You're a font of awesome information today, and we got a lot of cool stuff to talk about. I'm just going to conclude by saying this. I think that the government does have a limited helpful role to play here, but I think they need to do two things. The first thing that the government needs to do, when I say the government, I mean the folks on Capitol Hill, they need to create meaningful legislation that creates an immediate change in how we have an infrastructure that provides a more ready supply of alternative energy for travel. It is incredible to me that they are just so asleep at the switch on that, and they need to provide meaningful, modern infrastructure that keeps up with the pace of technology. Secondly, there needs to be a more meaningful, regularly based private-public partnership for exchange of information, because as you're correctly saying, the private market needs to lead the way in technology. It's not what the government does. And they need to have the meaningful conversations, but not these ridiculous circus environment hearings where they bring these CEOs in and Ted Cruz goes off and starts yelling at Jack Dorsey. I don't really care about those drama mama moments. Those are ridiculous. And the legislators need to be able to do their job and focus more specifically in a business strategic way to get more information from these brilliant CEOs. I know Elon Musk is a little bit quirky, and we can debate how his appearance was on Saturday Night Live, but I wouldn't mind him coming and providing a little bit of information on energy. We know that NASA's relying on him to be able to launch satellites, so he's already in on that conversation. Why not have those kinds of conversations? But if he came into a hearing today, Maxine Waters, and frankly people on both sides of the political aisle would just try to clobber him because they just want to have a political moment so that they can just throw it up on Twitter. And that's one of the reasons why we have some real destruction and defects in Washington. John, another great conversation. We have a lot of cool things to talk about next time. Have a great week, and we'll talk to you soon.
Thank you. Thanks.